Good morning, retail traders. I want to bring you stock that I played off of a knife the other day and that I'm watching real closely right now. And that is Hum. H-U-M. Hum. Hum. So we're going to go ahead and look at, well, there's a couple things I want to bring up first. This is a sneaky snake trading strategy. We talk about chart patterns, moving averages, and being in the now. Please hit that like and subscribe. And every video is a learning lesson. I always like to point something out in my videos, especially when it comes to technical analysis. I'm not a fundamental trader by any means, but I do like to read the headlines and stay in the now. So this is Hum. We've had a real big knife on Hum because of projections of higher insurance costs and just higher costs in general. When the government gets involved in your life, expect to pay more. It's just period. The bigger government gets involved in your life, expect to pay more. Example, my insurance at one time was $150. Now it's gone all the way up to $1,100 during the Obama era. So yeah, I mean, the government pays for a lot of it, because I'm letting them subsidize it with my private business, but yet I still think it's a bad thing for the health insurance agencies when the government gets involved and makes it a lot more expensive for the average American. So this is Hum. We're going to go ahead and go straight to the chart. Let's go straight to some of the news. I always like to pull up this Wahoo Finance and read stuff about it. Humana says insurance costs will be at the top end of estimates. Humana shares a fall. Also notes the increase of procedures post-pandemic. I'm telling you, it's not done yet. Humana joins United Health in flagging cost hit of rising surgeries. So every headline is not a very positive headline right now. They're more or less telling you that they're going to be paying a lot more, and you're going to be paying a lot more for health insurance. Let's see what else we got on here. This is one thing that I have in common with billionaires. Billionaires Steve Cohen and Ken Griffin have one thing in common, and now that makes three of us, but I'm not a billionaire. They both like these two strong stocks, and one of them is Humana, and let's see what the other one is. The other one is CUZ, so I might look at that a little bit later. But I noticed one thing about the chart on Humana, and we're going to pull that up right now. I thought I had it up here. Let me see, there it is. Is that this thing bounced off the 200 SMA here at 351 and had a nice run up to a high of 571. Now I called this stock out a while back, and we're going to pull this up, and we're about approached to that resistance level. This is the weekly time frame. There's a little resistance level on this flag right here, and we're going to clean this chart up. Well, first I want to bring this up to the yearly. Just a while back I called this trade off this double bottom right here. It would have a nice little bounce back up, and we sure did. It bounced from this triple bottom on the way up, and then she's pulled back and bounced up again. And then we had that real bad news. I mean, this was a huge knife. And when I say bigly, I mean bigly. When you get big knives like that, you're going to have a dead cat bounce. Big knife bounce, big knife bounce. This was huge. Overreaction, in my opinion. Biggest knife on the 3-year chart. I mean, you go back 3 years, you go back 20 years. So this is I keep reiterating, huge. We had a big knife right back here during that Bill Clinton crash. We had a little recession back then. We had a knife back here during COVID to the 200 SMA, 200 SMA, 200 SMA, 200 SMA, 200 SMA. So I think I got my point across. I'm going to set an alert somewhere on this weekly time frame where I think would be a good spot, and I'm not seeing one yet. Maybe right in here, because we have a head and shoulders here and we have a head and shoulders here, and this is the shoulder line of that head and shoulders, and I'll point this out to you. I call this a double head snake, right at 14,755. So you had a shoulder blade here, you had a head here, and you got a shoulder blade here, you got a head here, you got a shoulder blade here, you got a shoulder blade here, and you got a shoulder blade here. So that's real positive of the double-headed snake. And that runs right at 417.55. So I'm going to ensure myself an alert right above that 200 SMA to prepare, just in case this thing goes ahead and knifes. I want to be ready for that trade. And I'm going to put it at the mark at below. So I've got my first alert set at 426.60. Now I'm going to pull this up and show you the trade on the 5-minute. We had this knife right pre-market, and I called this sucker out. I said, man, we're going to get us a little bounce off this trade today. If you want to take this with me, go ahead. We're going to scalp it to resistance level. And boom, we scalped it sucker right at open. I was out of this trade in 3 minutes. Let me see how many minutes it was. Look at that 5-minute chart. I want to bring it up to the 1 minute time frame. When I'm scalping, I use that 1 minute. And you can see the patterns that come within it. So right out of the gate, I heard hum, hum, hum on the scanner. And then we consolidated here with a long leg doji and a spinning top. So these two engulfing candles, and I called this trade out, and we run it all the way up to the 51 EMA. And she found resistance again later on that day off that trend. So now we've kind of pulled back again. We had the nice little run yesterday or Thursday, and then she's pulled back to that support level. So it's either going to bounce off the 200 and we can take and scalp it again. This is scalping trade only for me right now until I hit that 200 SMA on the weekly time frame. Where is it? There it is. If it pulls back and hits that 200 right here, I'm going to be loading the boat for a long trade on this here HUM. Because I really do believe that this is way oversold. But you got to go with the sentiment of the market and the news. I mean, the more government gets involved in our business, the higher we're going to have to pay for it. That's just all I got to say about that. That's why the stock dropped so much. So we're going to look for some resistance levels on the 20-day, 1-hour time frame. If we take this, we got the snake, the breakout, the pullback with a higher low. We can come in here Tuesday and take this trade and try, if it gets the momentum, try to run it back up to a double top resistance at 469.06. I'm going to put a resistance line at that spot. So we've got the snake, the breakout, the pullback with a higher low. This is the perfect sneaky snake trading strategy. If we dip on down and hit this resistance or support, the new resistance will be the top and bottom of this here double bottom. But for right now, I'm very, very bullish on this trade for scalping. And then when I start to see, we break out of this resistance level at 469, I'll run it all the way up to the 200 SMA on the 1-hour time frame. Now we're going to bring it to the minute. Now this is what I like to look at when I'm scalping. We got a double bottom close on Friday. So if we break this 200 SMA, every time frame is different when I'm using the 200 SMA. Note, I use it as a support, a pivot point, and a resistance level in each time frame that I'm looking at. So if we jump in this trade at open and it dips down to a triple bottom, 1, 2, and 3, and holds, I'll run this thing back up to this triple top. And I'm going to do a trick to show you where I think the first resistance will be. You take the body of that candle, run it to the body of that candle, and what you have there is a triple top. Extend it to the right, 1, 2, 3. So this triple top became resistance at one time, and it can become resistance to break come Monday morning. So if this thing bounces above the 200 and bounces above that trend line, I can run this all the way up to 447.97 and look for an exit idea at the top of that triple top. Triple tops do not have to be horizontal. They can be vertical, and you can gauge trend lines off of those kind of triple tops of resistance to break. So if we take this trade, it pulls back down to a triple bottom. And holds right at open, I'll take it and run it on up and see if we can break this resistance. And if that breaks, I'll run it up for the triple top resistance. See if that breaks. If it does, long up here at that red resistance line of 449.05. That's it for Humana. Again, I like catching these dead cat bounces. Definition of dead cat bounce: dead cat bounce is temporary, short-lived recovery of an asset price of a prolonged decline in a bear market that is followed up with a continuation of a downtrend. Frequently, downtrends are interrupted with brief periods of recovery and small rallies. So that's exactly what I'm saying. I'm going to scalp this thing up until I see a resistance line, and that's where I'm going to take it. A dead cat bounce is a short-lived and often sharp rally that occurs within a secular downtrend. It is a rally that is unsupported by fundamentals, that is reversed by the price movement of the downside. I somewhat disagree with that because I'm using moving averages, and I'm going to use that 200 SMA as a support level. The technical analysis of dead cat bounce is considered to be a continuation pattern. True, but this is too big of a knife. The first bounce may appear to be a reversal, like I just traded first thing on Monday, or when that knife came. I took that knife and I scalped it real fast. Dead cat bounce patterns are usually only realized after the fact, and it is difficult to identify in real time. That's fact. I mean, dead cat bounce, you get the knife, so you got to work off that knife. But you can, the thing that gets me about this is you can predict where it's going to go. I'm using that 200 SMA on the daily. I'm using that 200 SMA on the weekly. And the thing can stop at that 200 SMA, as it did right here. So if I was trading this trade back in here, I would have said wait for that 200 SMA, and by gosh, we hit that 200 SMA. And I'm saying the same thing again. If we come over here and this hits that 200 and it doesn't have to hit the 200 SMA. It just has to come close. But if it hits the 200 SMA, I'm loaded. I'll buy as much contracts as I can buy, as I can afford, and run it up, or I'll scale in. I'll buy some. And then if it starts to break out, I'll add more, and I'll scalp it on the way up. So I just want to really emphasize that this could be a great trading opportunity. It's called buying in fear and selling in greed. Buy at support, sell at resistance. And y'all have a great day. This is the Sneaky Snake trading strategy, where every video is a learning lesson. Subscribe and ring that bell.